Traders, how you doing? It's Patrick Kenney back with another video. What I want to discuss today is stop loss levels and how they might be killing your profits. Hello everybody and welcome back to another episode. I'm excited about this one because we've got the whiteboard out. The famous whiteboard where it all started in 2015 back when we had the app called Periscope. And I taught a lot of people on this whiteboard. And this is where it all started for me teaching. I used to teach only on whiteboards. So today's video is kind of a reminiscing moment for me, if you will, to kind of discuss some things that I like to discuss back then. And today's topic of interest is the stop loss. And actually, what I want to talk about today with the stop loss is how people might be using it, which is great, and we always recommend that, but how they might be misusing it, which actually is destroying their profits. So what we're going to do today is we're going to have a scenario over here. Let's say we're in a bullish market, okay? So we're in a bull market, and this market is making its way to the upside, right? And you decide that if this market decides to take a dive back down to say previous resistance turn support, you're going to try to get long in this market. And this is a theoretical scenario that a lot of traders go through, and if you're a beginner trader, definitely take some notes. It's going to help you in the long run. So you see this market and you're deciding to yourself, you know, if this thing goes down, I'm going to hop in this trade long. And for those of you guys that don't know what long means, basically it means a bullish market. You're buying the market. Anytime price goes up from the point you buy, you make money. And so this market decides to make its way down, and it hits that X marks the spot zone for you. You're excited. You're ready to get in the trade. And so what you do is you enter the trade, say right here at this dotted line. The price comes down here and you enter it, right? And what you decide to do is you decide to just say, oh, I'm going to risk 20 pips or 40 pips or something of that nature. Let's say this is a 1 hour time frame, so 20 pips would be a better example. Let's say I'm going to risk 20 pips, and that 20 pips is sitting right there at that dotted line. So you enter this trade here. The market decides to come down, it hits your stop, and then it continues. Common occurrence for a lot of beginner traders. And some of you guys that might be listening to this video as you're taking notes might be saying, yeah, that's happened to me before. How do I adjust that? Well, here's the deal. A couple things happen. And oftentimes traders, I'm just going to grab my eraser here. Oftentimes traders think that they know how to resolve the issue. And the way traders think, and I'm going to show you what the first wrong way to do it is, but traders think that if they have that situation where we have this market and they're trying to get long at this area and the market comes back down and they see the scenario again, this is your second time at things, this is your second time you're saying, okay, I know I'm not going to put my stops here. I'm going to put my stops down even further, double. 40 pips, right? Now the scenario is maybe it comes down and it doesn't bounce, right? It doesn't bounce. But right when it gets back to where you entered at in profit, you're starting to get happy at this point, and you only get up about 10, 15 pips, and that's where you get out and you take profit. Now these situations happen all the time to traders. So the first scenario is you're getting stopped out too quickly. You don't want it to happen. The second scenario is, you know, you risk 40 pips to ride in drawdown for sometimes weeks to then have it get into profit, and immediately right when you get into profit, you pull out. And so that is the preface of today's topic. Now, one of the things that I want to preface with this video today is that there is no single scenario, there's no single strategy that you should pick over another. Do your due diligence, find out what works for you, your timing, your work schedule. All of this stuff is very important, and it's important for you to remember that. And so today what we're going to discuss is stop loss levels, but how you can use them in a smart manner. Today specifically we're going to talk about two different scenarios. One is a sequence-based stop loss, and one is a structure-based stop loss level, and how you can utilize it. Before we do that, what I have to mention is extremely important, and it is the one way, and you've probably seen my video on this. I've uploaded it. If you haven't seen it yet, go back to the video. It says how to guarantee success in Forex. It's about a 3-minute video, and what I talk about is risk reward. So that's what we have to talk about today, is risk reward real quick before we get into the actual stop loss technique. Risk reward is just as it says. Let me maneuver this a little bit. There we go. Risk reward is just as it says, guys. It's how much you're risking versus how much your potential reward will be. And so if you're risking 20 pips and your reward is 40 pips, your risk reward is a 1-to-2 ratio. A 1-to-2 risk reward ratio is your minimum. Is your minimum that you should be trading at. What this allows you to do, guys, is it allows you to say, we'll use this as an example. So we're going to go trade 1, trade 2, trade 3, trade 4, trade 5. We're going to say you take 5 trades. Now we're going to say you lose 2, win 3. So we're going to say trade 1 is a loss, trade 2 is a loss, trade 3 is a win, trade 4 is a win, trade 5 is a win. Okay? We lost 20 pips, we lost 20 pips, we lost 20 pips, we won 40, made 40, made 40. Now all this is prefaced by a 2% risk, max. So basically what this means is 2% loss, 2% loss, 4% gain, 4% gain, 4% gain. Okay? That's how this picture kind of plays out. And so what the importance thing is if I lose 20, I'm down 2%. If I lose the next trade, I'm down 4%, right? I'm negative 4% right now. But then I win my third trade, I'm back to break even. Then I win my fourth trade, I'm up 4%. Then I win my fifth trade, I'm up 8%. That's the importance of risk reward, okay? That's the importance of risk reward. So now what we're going to do is we're going to transition into how to actually trade via the stop loss method. Okay, so now that we have the basic principles of risk down, what we need to discuss is 2 different ways that I like to talk about using the stop loss. Now, first things first, you have to remember this risk. You have to remember that you're always making sure that you're double reward as you are to risk. So if you're risking 100 pips, make sure your reward is minimum 200. And so one of the ways that we utilize stop loss levels, let's say in a bullish market, if you decide to get long here, what we like to do is put our stop loss in the first scenario under previous structure levels. A lot of you guys have seen that in the beginner course. If you haven't, make sure you go check the description for the link or go to ffxacademy.com and we talk about how to do this. It's all for free in there. So that's the first way, is when the market is, say, bullish in this case, it's coming up, we have a pullback, okay, we have a peak here, 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 we enter here, say another peak, right? You're putting your stop loss below these structure levels. That way you're not cutting yourself and you're letting the market breathe. And the reason that is that in this scenario, if this market decided to come and break these lows, the market is then in a new sequence, and we'll discuss that in a minute. But the market's in a new sequence and it's potentially bearish at this case. We have to look at it from an overall view. And so the other way that I like to talk about, and a lot of my students know this way, is utilizing it based off of sequence. So if we have a scenario where the market's bullish and then it decides to pull back like this, what I teach in the academy is a simple 1, 2, 3 movement. And so right here, and some of you guys, if you know what this trade is called, comment below. I would love to see your guys' comments. Comment below. I'll give you a shout out in the next video if you do. But comment below what kind of trade setup this is. It's 2 letters or 2 words. You guys know what it is. It's the one that I like to trade. So what we like to do is we label this origin point up here, and big O, origin point. We label this point 1, point 2, and our equal extension from these levels, aka the 100% Fibonacci extension is where we like to enter. Now, when you get in that trade, your stop loss can be under this previous structure, or the Fibonacci is going to spit out another number, the 161.8% Fibonacci extension. And the 1618 Fibonacci extension is important because that's where we like to set our stop loss. When the market hits that point, typically we are in an entire new bearish market. So the moral of this story, guys, and I don't like to make videos long because I know attention spans are short, but the moral of this story is you must let your trade breathe. And as I pointed out to you guys, you can lose some trades and still make money. Your risk-reward ratio is the most important thing. Without a doubt involved. Okay, so make sure that you guys understand this. Once again, ffxacademy.com for the beginner course. It's free. Go to that site. Immediately on the front page will pop up a big red button that says create your free account today. Click that and then choose the free account package. What it's going to allow you to do is come in and learn some of these basics so that when I bring out more YouTube videos or you get in the advanced course, you're going to understand the basics before you get into running, and you're going to understand the terminology of what I'm talking about, okay? So I hope this video gave you insight on how you should let your trade breathe based off structure or sequence, and utilize the most important thing of this video, if you didn't get anything out of it, is risk reward and risk management, okay? So I'll see you guys in the next video. Once again, visit ffxacademy.com. I'll see you guys later.